What's going on, YouTube? This is Dave's Daily Trades, where I bring you daily AMC technical analysis, price predictions, and of course, the latest and greatest news. In today's episode, we're going to be breaking down the options data with unusual whales. We're going to be taking a look at some new 13F positions, specifically with the Bank of New York Mellon. We're also going to be discussing the spring theory and why this is really such a big thing to talk about on a day like today. We're going to take a look at the IWM, the ETF that holds a lot of AMC and where that is headed. And then lastly, guys, just breaking down key levels to be aware of for the rest of the week. But without further ado, we're going to roll right into the intro and then hop into the technical analysis. And we're back. All right, guys, not the day we were looking for. Now, of course, if you have been following along with the channel, we have been discussing that future rollover date, specifically the 11-day out period, which we have seen great potential with. And of course, guys, we have looked for the last 4 previous times that this has happened, and we have seen 20% days. Now, of course, it didn't happen today. And I was wrong about the predictions, which absolutely sucks. But like I say every time, guys, AMC is a highly manipulative stock here. What we expect to happen may not always happen. If things are looking really good, well, it can end up being a bad day, especially what we saw today. So that's why I really want you guys to start taking AMC on a day-by-day basis. We don't have to worry about these random drops in price or these random jumps in price, because I do know if we saw a positive 5.04%, exactly opposite of what we saw today, it wouldn't have changed anything. No one would have sold, possibly even bought more. But guys, what we do is continue to just buy and hold, and that's been our strategy for the past 11-ish months now. And personally continues to be my strategy moving forward. Now, I don't want anyone using what I talk about on this channel to go YOLO some option plays, because that is really not the way. That really actually works against us. So let's take this play day by day. Let's not worry about key dates, and let's just break it down and move on from there. And what we have here is the Fibonacci retracement scale drawn from our recent low of just about $29.40 to our recent high of $52.79. Now, what's been playing out? Well, of course, in the recent past, we did get this just about double bottom on that 78.6% level before we started moving up and testing the top end resistance level over here. That $43 level has been absolutely brutal. We did get rejected yesterday, and today was just absolutely brutal. But on the good side, I want to point this out, especially to people who say TA does not work for the stock. Now, look at this. We came down here right to that 61.8% level, which, of course, if you guys know, is the golden pocket, where stocks love to bounce off of that level and start reallocating to the upside. Now, am I saying we're going to immediately jump to the upside and this thing is game over? Absolutely not. Now, we are coming to the end of our formation here, but guys, I do think it's going to take a little bit of time to play out. Now, key levels that I have to look out for, we do have some support here at that 37.50 level. I know that would be a little low, but that is totally fine to see. This has played out in the past, going back all the way to right around 7.30, where this acted as resistance, but has since turned into support. And we saw that support confirmed on 11.11. I know, good luck, make a wish. But anyways, guys, I do think we are going to briefly rebound off this area back into our formation here, potentially come back down and retest this 37.50 area before starting our upward push over here. Now, of course, guys, time frame really doesn't matter. This stock is going to move when it wants to move. We know that institutions are loaded up, and we know that the bullish sentiment is there. But the big thing that we're missing right now is the volume. If we take a look at today's volume, we are trading right around 27 million shares, which is still very low. And just for example, I'm going to hop back over here to a random day, 9:30, where volume was not well over, 101,000 shares. Quite a bit, guys. To see us down in the the mid 20s here is definitely something shocking. And what I have been saying is we really can't start that next leg up until we start seeing volume incrementally moving to the upside. Now, it's going to take time. It absolutely will. We are going to bounce around in this area, I think, from 37.50 all the way to 43 and change until we get that push and breakout of 43. Once we do break out at $43, just to confirm, I really think it is off to the races, and we are headed for some very interesting price action. But it is absolutely going to take some time. Now, just jumping into a smaller term scale here, we can really see what happened. Now, we have had this upward trend line that we've been discussing for a few weeks now, and we did break that pretty early this morning. I would have loved to see us hold this, but we didn't, and it's totally fine. We did come down to this level, pretty much acted like support here at $38.32, which should hold until tomorrow. We should see some upward potential and potentially retest to that $37.50 before moving out. It is really going to be a rocky road ahead of us, but guys, be strong. Now, just one thing to note, because I have received a few DMs specifically on today and always on the red days where people are saying, is it okay if we do break out of this formation to the downside? And my answer to that is absolutely. It is totally fine. We've seen this in the past, specifically happen over here. And what happens when we break out to that downside? Well, we find support at a key level, and then we start a push up. So moving down and moving out of that formation is totally fine. It really just sets the tone for the next couple of days ahead and really causes that bullish price action to come in because we have the dip buyers, guys. The dip buyers are there, and it's the apes. These apes are not freaking leaving. And of course, we'll discuss more on why this happens once we move over to that spring theory I briefly discussed at the opening. Now, I do want to just jump into some articles today, but first we're going to look at unusual whales. So I do have to say, the options data looked very good for today. Specifically in the morning, the call data that was coming in was crazy. I really had some high hopes for today. But of course, guys, Hedgie decided to really just break us down, change the tone of things, and really just start some psychological warfare that has been playing out for quite some time. But nonetheless, guys, the calls were printing today. I know it is a little mixed towards the midday, but that's fine because we were seeing some massive movement to the downside in retrospect. Of course, in the grand scheme of things, 5% is absolutely nothing. But still, to see that people were using this time to go in on these call options really just shows the bullish sentiment for AMC. Now, another thing to briefly touch upon here is when we do have these days that are down, implied volatility absolutely decreases. And implied volatility is a key driver in the options chain. So when we have implied volatility go down, options look very, very appealing. Of course, if you are in the market to buy some options. If not, it is what it is. But nonetheless, guys, that IV being low simply means that more buyers are going to be out there for those calls because they know the upside potential. And of course, they are at such an attractive price. Now, I just want to go in and break down the flow levels, and this is specifically for today. Now, look at this, guys. I want to draw your attention to the number of calls, the volume of calls, and the premiums of calls versus puts here. Now, it doesn't take a rocket scientist to see this. The bulls are absolutely in favor here. We saw 90% of the options coming in today being on that call side. Same thing goes with the volume. Volume was 92.3% calls. In the premium, 94.2%. That is absolutely bullish, guys. 110%. And to see the options flow on our side really just shows that, like I said before, IV is at a very attractive price right now, or causing options to be at a very attractive price right now. And B, the buyers know that the low may be in or is very close to being in until we reach that next move up. And it really is the spring. And of course, we're going to jump right into it. So guys, this is a very simple theory. And of course, there are some confusing formulas and all that good stuff in here. But you know what we're going to do. We're going to keep it absolutely simple. And just to dumb this down, we have a spring. Okay? When the spring is pretty much loosened all the way up, there isn't a lot of pressure going to the upside or the downside. Now, when you start to compress that spring, you have all of this tension building up, and it gets harder to push it down. Like we've been seeing, guys, they have not been able to drive us down significantly compared to the past when they could drop us 10, 12, 15% within a given day. Now, it's getting to that point where they cannot drive the price down too much lower. And the spring really wants to jump and explode like a freaking rocket ship. And we're almost there. We really are almost there. But whatever the catalyst is, whether it's volume, whether it's some various catalyst within AMC's stock price, whether it's, day traders or swing traders coming in, or a downturn in the market, which causes AMC to move to the upside, whatever it is, it breaks it. It breaks it. And that spring, since it's been compressed for so long, for the past 4 months or 5 months since June, I can't do math right now, it explodes. And that is exactly what the spring theory is. And, we should almost be excited knowing this and seeing this day today, because we know that this is compressed. This past couple of weeks, they have really been unable to control the price in AMC and drop it below key levels. They really have been trying, but every time we come in, we buy these dips, and we've been holding on. We haven't been selling our shares. The only thing that these institutions on the opposite side, the short side of this game, are doing is they're trading back and forth. What they're doing is buying, selling all the way down, and they're controlling the bid and the ask price. Now, if you have the bid and ask price slowly diminishing, well, of course, your stock price is going to fall as well. And that's just a cheat code that they're using. Think about GTA 5 when you can do up, down, left, right, triangle, square, circle, X, and get a freaking helicopter. The same thing's happening. This is a very manipulative game and a very manipulative stock here that we really have to keep into consideration. But the last thing, on a very happy note, we have the Bank of New York Mellon going over their 13F. And look at this, guys. A 30.15% increase in ownership, of course, in AMC. They're currently sitting on 2,354,168 shares of AMC, worth a total of just about $90 million. That was really well overhyped there. I apologize for that. But still, guys, seeing that the institutions are still buying, seeing that they are more bullish than ever, especially at levels that AMC has never seen in its history, what does that tell you? Just think on that, and I'm not going to answer it. Very rhetorical question here. But guys, that's all I have for today's video. Be sure to stay strong out there. Don't worry about these down days. Think of the spring theory, and just know we are so close. Peace out. Tune in for the next one.